Thank you all for joining the second quarter results conference call. I'm sure you would have received the results by now. However, let me briefly take you through the highlights for the quarter/half year ended 30th of September 2021. Financials. All of you are aware that H1 of last year, particularly Q2 of last year, was exceptionally good for our US generic business. Steep price erosion in the US market since then has impacted the business adversely. The adverse impact got compounded by the fact that with effect from 1st of September 2020, the government withdrew export incentives for pharma sector, and also the Indian rupee was trading higher than dollar almost throughout April to September 2021 period vis-a-vis H1 of last year. However, good part is that we have been able to arrest the fall on a sequential Q-on-Q basis. We did almost 98% of sales, and PBT and PAT are 5% and 3% higher than preceding Q1. During the quarter, our revenue was down by 11% to 1292 crores. This is in context of previous corresponding quarter, that is September 2020. The revenue was down by 11% to 1292 crores. EBITDA was 268 crores, which is 21% of sales. Profit before tax and profit after tax was rupees 209 and rupees 169 crores respectively. EPS for the quarter is 8.61 per share versus rupees 17.24 in the corresponding quarter in the previous year. Coming to H1 numbers, our total revenue are down by 6% to rupees 2618 crores. EBITDA down by 40% to 522 crores, which is 20% of sales. EBITDA for the current H1 is 20% of sales. Profit before tax and profit after tax are down by 47% to 408 crores and 334 crores respectively. Earning per share for H1 is rupees 16.98 per share versus rupees 33.25 in corresponding H1 of previous year. Capex. Capex for the quarter is 133 crores. H1 is 257 crores. Cumulative Capex for ongoing projects under CWIP, including the pre-operatives, is 1,981 crores. Financial assistance to Aleor JV for H1 is 55 crores. Borrowings. The gross borrowing at consolidated level is 850 crores versus 500 crores in June 2021, and the company has 329 crores as cash on hand. June was 273 crores. So at net debt level, we are at similar levels. Net debt equity stands at 0.10. I will now hand over the discussion to Pranav for his presentation on international business.
Thank you, Mr. Baheti. As you all know, the U.S. business continues to remain challenging on account of the price erosion. At Alembic, we've felt it more because the last 3 years have been quite phenomenal in terms of the pricing and the opportunities that we had in this market. As we move forward, we look forward to launching new products as well as picking up share in existing products. We remain bullish on the U.S. market in the future and the years to come. R&D expense was 13% of sales at 168 crores for the quarter. We filed 3 ANDAs during the quarter. We also received 5 approvals, including 1 tentative. We cumulatively have 150 ANDA approvals, including 18 tentative approvals. We launched 4 products during the quarter, and we plan to launch around 8 to 10 in the second half. Just minutes back, the FDA concluded a re-inspection at our injectable facility, F3, located at Karakhadi. As you know, the F3 facility had received the EIR about a month back. However, the FDA came for a re-inspection on 28th of October till today, just up until half an hour back. and they've concluded the inspection with 10 observations. None of the observations are related to data integrity, and the management believes that they are all addressable. The inspection also covered 2 additional products apart from the one which they had come for earlier. Hopefully we'll get compliance in place and send our responses shortly as well. Coming to the financials, the US generics was at 348 crores for the quarter, which was down about 40% compared to the last year, which was a phenomenal quarter for us. During the half year, it was 716 crores. The ex-USA generics remained flat at 197 crores for the quarter, whereas grew 6% on the half year to 394 crores for the first half. As you know, the ex-US generics had a high base of last year where we had, again, a phenomenal growth. The API business degrew by 9% to 239 crores, and it was down 2% to 519 crores for the first half. The API business also, while it continues to do well, it was a little clumpish last year because we had a lot of azithromycin API sales which were used in COVID. So net of that, rest of the business has grown as well. I now request Shaunak to take you through the India branded business.
Yeah, good afternoon, everybody. For the quarter, the India formulations business grew pretty much in line with our expectations, with a robust contribution from all our key therapy areas, along with all the key product segments. If I could say this was a key landmark to this quarter's numbers. Very briefly, the areas that were critical to Q2 numbers was based on consistent improvements in a couple of areas. Just key ones of these were, I think, on-ground execution and operational efficiencies for the entire sales team have improved tremendously over the last 2 years. This, complemented with a more evolved approach to how we engage with customer relationships, something that we were in the process of implementing over the last 2 years, I think enabled us to kind of increase both the quantity of customers we could engage with, along with the more robust quality of engagement with these customers versus what we could have done in the past. Coming to the numbers, the India business grew by 23% to 509 crores for the quarter, and it grew by 37% to 989 crores for H1 on a Y-on-Y basis. To break this performance down, I think the acute segment recorded a primary growth numbers of 27%. As you guys were aware, last year was an abnormal sales period for azithromycin oral solid, which had a robust growth in 2021. If I were to take X of that number, X of azithromycin oral solid, the acute business grew by 79%. On the specialty side, we had a 20% growth. Majority of it was driven in all the therapeutic areas. We had 16% growth in gastroenterology, 22% in gynecology, diabetic was 29%, and orthopedic was 34%. Along with that, our animal healthcare business continues its run of great performance now. It recorded a 24% growth over Q2 last year. And as you guys were aware, Q2 last year for animal healthcare was a great quarter also. We are quite positive about this business going forward. As we see it today, there are multiple operational levers that we are working on to keep this momentum going. Also, along with that, there's a large scope to resource this business adequately. Where in the past, we have been extremely conservative and cautious on the resourcing of this business. Along with this, I think continued optimism about the overall IPM growth, which we've been seeing for a few quarters now, hopefully should add further momentum to these numbers. I will throw the floor open to questions now. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Damayanti Kedia from HSBC Securities and Capital Markets. Please go ahead.
Hi, good afternoon. Thank you for the opportunity. So my question is on FDA inspection for the injectable plant. So what has triggered FDA inspection in such a short interval since you received AIR some time back?
A good question. To be honest, I don't know. They had mentioned that they will come physically to re-verify everything. And apart from the one product, Ketorolac, which we had, which the inspection was earlier, they came for 2 additional products as well.
Okay, so it was product specific as well as the normal GMP re-inspection by the FDA.
Yeah, well, see, because it's not a commercial facility, it is always product specific to get the product approved. So apart from the first product, they came for 2 others, and they wanted to come and physically verify some of the others as well.
Okay, and you mentioned you received 10 observations, which are addressable as per you in, I'll say, reasonable time frame.
I believe they're all addressable.
Okay, and my second question is again on the US business. So due to these short-term challenges, do you think the opportunities from the capex which we had invested in last couple of years, the upside is now pushed behind significantly from what we had anticipated earlier?
So we continue to remain bullish on the US market. I still think it's a very interesting market. As you know, in the last few years, we've had a much higher return in the US market and hence at a corporate level, much higher EBITDA because of the shortages in the market. We charge much higher prices, right? So that's what's corrected itself now, which we expected it to happen. Of course, it lasted longer than it did, so we're happy about it. I expect that disruptions will restart in the US business in the next 6 months or so. That will give us more opportunities. As regards the capex, it depends which parts of the capex. If you see the Aleor capex that we are in the JV, that's already started contributing and it's already a commercialized product. F3 will move back a little bit because of this approval till we get this compliance. F2, the oral solid is already approved, but there, as you know, it's not got pushed back. It's just that the patent expiries are later and we wanted to lock in the paraffol, so that is on track. F2 injectable, we have filed the first of our 2 products, so that should also trigger an inspection. So by and large, this all should be on track as far as we are concerned, except F3, which has got pushed back due to this FDA observations.
Okay, and my final question is, when do you expect, bottom for the US business for us? Because, we have been seeing struggle for last few quarters. And we understand pricing situation still remains challenging in the US. So according to you, when you will be reaching bottom and we should see recovery from there on?
The bottom is when someone stops reducing the prices. Having said that, compared to last year to what we've seen in Q1 and compared to last year what we've seen in Q2 year on year, I think this is where the base or so far what we think is the new base is at right now. It's a fairly steady product mix, and that's where we are.
Okay, so this 45 to 50 million a quarter is a new base as for you.
Yeah, Q2, what we have in Q2, that's with that Q1, Q2 similar numbers. That's what we expect somewhere around there.
Okay, sir. Thank you. I'll get back in the queue.
Yeah, thanks.
Thank you. The next question is from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Thanks for the opportunity. So just to, again on this committee inspection, just would like to understand out of these 10 observations, are there anything
Tushar, we can't hear you. Can you just repeat or just if you're on a speaker, you can just pick up the line. We can't hear you.
Is it better?
Yeah, now it's better.
Okay, just again on Karkhadi inspection, I would like to understand out of these 10 observations, are there anything which were similar or more or less same as the one which were issued recently in the February inspection?
It's literally the audit just got over, so I have not gone into the details. I know there's no data integrity, and I believe they're all addressable. I haven't gone through all the observations as yet. It literally just got over the audit.
And just to clarify, so this got again triggered by a product specific inspection. So this was for 3 products or for 2 products?
So they came to verify our compliances, number 1, and number 2, while they were here, they also came for 2 additional products, so total 3.
Okay, sir. Thank you.
Thank you, Vishal.
Thank you. The next question is from the line of Vinit Gala from Monarch Network Capital. Please go ahead.
Hello, sir. Thanks for the opportunity. I have 2 questions on this F3 plant. So, sir, as per your initial comments, we have been audited for 3 products altogether now. So if you could throw some light in terms of the commercialization timeline, competition, and tell us broadly about the market size of these products for us to gauge the potential.
Vinny, we don't declare that. We don't disclose the name of the products or the market size because it's a little misleading. So I would like to refrain from that.
Fair enough, sir. So, sir, what would be the commercialization timelines? By when do you expect the remediation to get over?
Commercialization is we've literally just got completed the audit. So we will send our responses, and then it depends what the FDA feels. So it's tough to say. I can't really give a timeline on that because there may be a back and forth with the FDA. They may recommend some other corrective actions, but it's tough to say.
Fair enough. So, last question on the cost rationalization initiatives that we discussed during our last call. So if I check most of the expense line items, they are sort of in line on a Q-on-Q basis with respect to the employee costs or the R&D expenses. So what are the cost elements that you are looking at rationalizing per se?
It's a good point. So so we have done a lot of rationalization of the employee cost. You will not see it now. You will only see it Q3, Q4 onwards because of the time frame and then the notice pay that we have. So it's still reflected in our books, but moving forward, you will see that. Second thing that happened is in terms of cost, while we have done cost rationalization in terms of employees as well as consumables, efficiency improvements, they've kind of got blunted out a little bit because we've seen much higher freight costs during the period, as well as the supply chain disruptions that we've seen, the shipping costs that have gone up. So these have led to some higher costs. We also shipped a lot more by air. I mentioned that we picked up a lot of accounts. Again, you will see the increase in business in Q3. And so we had to airlift a lot of those products, which was a little higher in the last quarter. So that's kind of blunted out a little bit of the cost reduction initiatives and the profit, for that matter of fact.
Fair enough. So on the R&D side, my next question is on the R&D side and on this, on the gross margin. So can Q2 be considered as a sustainable base going forward?
I think so, yes.
Perfect. That's it from my side. Thank you.
Thank you.
Thank you. Reminder to the participants to ask a question, please press star and 1. The next question is from the line of Rashmi Sancheti from InCred Capital. Please go ahead.
Yeah, thanks for the opportunity. Just want to understand the reason for the sequential improvement in the gross margin. Was it a product mix or, company had some inventory gain benefits or what exactly it was? As Q1 FY22 also had higher COVID sales and that's why the margins were impacted and this is something, which is going to be a new base. What is shown in Q2, despite higher API prices, we are seeing a pretty good improvement in the gross margin.
So I do not know what you are referring to because the margins are flat as far as Q1 is concerned and down as far as Q2 of last year is concerned.
What I meant is basically the raw material cost is pretty low compared to Q1 FY22. The previous quarter.
Yeah, Rashmi, the reason is that, again, product mix actually, and you will see this fluctuation, but the band is, very small, the band would remain between this 2% to 5% actually. Essentially in Q2 it is a little lower on account of gross margin are little higher on account of product mix.
So also because the domestic business has done much better. So this is a consolidated result, and domestic business has done much better. There the margins are better.
Okay. And my next question is that excluding Azitral, what is the growth in the domestic business on YOY basis?
Ajay, you would respond to this?
Yeah. So except azithromycin, it is 35%.
35% during the quarter, right?
Yeah.
Okay. And my last question is that have the operating costs started coming in from the new facilities?
No, I think we're just doing the filings and the batches. We cannot commercialize it until we get the final approval from the US FDA.
Okay. All right, sir. That's it from my side. Thank you very much.
Thank you.
Thank you. The next question is from the line of Anmol Ganjoo from JM Financial. Please go ahead.
Yeah, hi. Thanks for taking my question. My question is for Shaunak or probably Ajay who can respond. So if you look at the domestic business, I think, really impressive, especially when you look at it in the context of the ex-Azitral number. 6% sequential growth, and also given the fact that, this is a business which has been all waiting to kind of rebound. How do you want us to think about drivers for this quarter, which led to this big beat? And on a full year basis, how should we think about the domestic number, base domestic? Even if you look at the therapy-wise performance, while the growth for Alembic is faster than the representative market, but obviously that's not enough to explain such a big outperformance.
Yeah. So let me answer it, Anmol, as much as I can. Maybe Ajay can chip in with some data-driven also numbers. Sorry. Yeah. Okay. So, like I said, I think some of the stuff we've done operationally, and we've been talking about it for some time, I think the impact that we're seeing is not unfolding in one product segment. I think we're seeing some of these operational efficiencies unfolding across the organization. So if I could put it, it's not limited to acute or gastroenterology or gynecology or anti-diabetic. I think it's happening across the board. I think we're seeing pretty much every segment has seen a strong growth for us. Including the ones that are even very tiny for us. So for example, derma and ophthalmology that are quite small, but those also have seen a good growth. And animal healthcare, which is actually a totally unrelated business, but a lot of these operational realignments have happened in that part of the business also. So that's how we see the growth going forward. I mean, where are the opportunities for growth to increase? I think definitely in certain key areas. I think gastroenterology is definitely scope to increase growth numbers. I think cardiovascular, there's some scope. I think anti-diabetic, there's definitely a lot of scope for us to grow numbers. So I think going forward, I think we see this kind of, so I wouldn't put it on an absolute basis per se, what I'm expecting, because as you're aware, I think market numbers determine our growth numbers also to a fair degree. But I think what I can say is that if there's any delta between the market numbers and the internal numbers, taking in factor of all base effects and things like that, I think we expect a good outperformance versus RPM to happen going forward. I don't know if that answers it.
Yeah, that answers the question largely, and thanks for that. But anything more granular that you want to call out for in terms of either lead indicators or products that we should be watching to kind of monitor whether this new impressive number is really sustainable?
So I think the way I would look at it is that I think we can send you guys a list of products that is key within each of these therapeutic areas, and if you were to see at each product level, I think pretty much at every product we've done well. So just to give you, I think it's not just say azithromycin that has, not azithromycin is the wrong example for this quarter, but if, for example, it's not just a lead product which has done well, it's the number 1, number 2, number 3, number 4 product all the 4 products have done well, and we've been able to kind of find space for all of them to grow and figure out how to do it in a way that suits us. So, but we can send you at a granular level and a product-wise from IMS what you guys can track as a lead indicator for this for sure.
Thanks. That helps, Sean. My next question to Pranav. So Pranav, this quarter, did we see the full impact of incremental competition in theophylline?
I think, if you ask me, this is a steady state. I think the market shares are steady, and we've seen the full impact of theophylline in this quarter.
To that extent, assuming that the current run rate of approvals, even assuming that we don't get injectable approvals, would it be fair to assume that always hard to pinpoint the exact number, but we're somewhere around close to the bottom as far as the US quarterly run rate is concerned, or you're seeing even further adverse headwinds with respect to the US pricing?
Yeah, so that's a good question. I think, Anmol, the way I think about the business is compared to last year, where we had unusually high prices. Compared to that, I think this is a new base. While we may see erosion, we're not going to see the massive chunk that we saw in the sartans that happened last year to this year. There may be a little bit, but I think it'll be marginal. I think this is the new base. At least I think of it as a new base. And how do we now grow onto this with new product launches and capturing new opportunities?
That's helpful. I know it's been very early since you guys have received the US FDA communication, but anything in particular you want to call out, or you think there'll be a time that we get incremental update on this, because we're feeling really, excited that that this facility had finally gotten an EIR and.
Us as well, and we're actually hoping that they'll come. But I think it's a learning curve. It's a new area for us, and I'm pretty sure that we will get through this. There's nothing particular I can talk about right now because I have to really study it before giving any input. But I believe they're all addressable, and it's a learning curve, and I believe as we have our other facilities keeping compliant, I think this will also get there. I think it's going to take some time, and there's a little bit of a learning curve on it.
Thank you. That's helpful, and good luck, guys.
Thanks so much.
Thank you. The next question is from the line of Mehul Sheth from Axis Capital. Please go ahead.
Yeah, thank you for the opportunity. So first question on your cost rationalization that you have talked about. When you say you have rationalized the employees, so it is for India part or the across the business or the US specific, where you have actually rationalized these employees?
So this is part of the international business, so which is US and API, the international business, not the India business.
And also, when we say gross margin is largely led by domestic business, better domestic business, so same scenario was there in Q1 as well. So what was the thing that is working in our favor in this Q2 to see that improvement in the gross margin?
I think it's not directly correlatable. While domestic did do well, but it's a combination of factors. I think the product mixes in both the divisions, and various other opportunities. I think it's just too minor in the whole scheme of things.
Okay. And one question on India business. So you have reported a very strong H1 growth, but when I see AIOCD data for the October month, for a single month, your growth is almost like a flat, 0% growth. So how do you see the trend going forward from here?
I can't comment on AIOCD numbers. We don't subscribe to that data, so unfortunately, I can't comment on that.
Just you can give a monthly trend or the trend that you are seeing from, say, October, November month, that growth is picking up, or the normalized growth, or what kind of growth you are seeing on a month, or we can say in October, November month?
So I think, if I could put it, I think growth continues the way it was. I think we don't see any change in that. I think the market growth numbers have come down a touch, but I think maybe that's more seasonal in nature, but we expect this to continue. So
side we can expect more than 20% kind of a growth in FY22 in domestic?
Look, I can't predict. I think there's still quite a few months left between now and end of the year. I think for a 20% kind of growth, I think the market would have to continue with that, with the kind of growth numbers that it's been showing so far. Maybe there might be some easing up of that, but yeah. So.
Yeah, and one last question, if I may, on the US front. So we are seeing this quarterly run rate of around 48-49 kind of $1 million. So on annual front, this will imply more of like a 200 million sales, and over that there will be some contribution from the new launches and all. So largely we can see that it can be just 200 plus kind of a sales that we can assume for the FY22.
We refrain from giving guidance. Pranav has already said that we see the last quarter being almost the bottom. If not the bottom, there may be some more erosion in prices, but we expect to set it up against new launches and some pickup in market share. And I think that's all we can say at this moment.
Okay. Thank you. Thank you for your time, sir. Thank you.
Thank you. The next question is from the line of Cinderella Thomas from Centrum Broking Limited. Please go ahead.
Thanks for the opportunity. Team, again on the US market, if I look at the current base of 47, as you're saying, this could be more new base. But if we look at the EIR or the upcoming activities from US FDA, how should we look at it from a 12 to 18 month perspective? What kind of new product basket do we expect over 12 to 18 months, specifically from the injectable side? And what kind of cushion it can provide to this base? If you could help us understand a bit more color.
So, I would not like to segregate injectables per se, and I think we haven't done that. But our filing continues to remain at about 20-25 odd ANDAs per year, closer to 25. And that includes injectables, ophthalmics, everything. It's a mixed bag. In terms of launches, as I've said, this year we'll launch about 15 odd products, and we'll continue launching about 15-20 products. And some of those in the future, as and when the EIR will come, will be from the injectable facility as well.
So do you see any incremental cushion coming over next 12 to 18 months time frame?
Yeah, I mean, absolutely. As we see more launches happening, that will keep adding to the base business as we move along. It be either injectables or OSD both.
Okay, as this quarter we saw only 3 ANDA filings, so this should pick up as we go ahead?
Yeah, as I mentioned, for the year, our intention is to do about 20 to 25 ANDA filings.
Okay. And just on the API business, if you could help us understand some more color and outlook, how things are, because is the channel inventory normalizing? How are we seeing things in terms of demand as well as the overall market for our API segment?
Yeah. So the API business continues to do pretty well. I think it's an interesting opportunity. It's an interesting part of the business. It continues to do well. I think we're growing across the board and all the APIs. Just we've shown a degrowth because last year was a very high base of azithromycin, which is used for COVID. So you take that part out. Apart from that, the rest of the portfolio is all growing and it's doing pretty well.
Okay. Thank you so much and all the best.
Thank you. The next question is from the line of Ranveer Singh from Sunidhi Securities. Please go ahead.
Yeah, thanks for taking my question. My question on the India business, the growth in ophthalmology and dermatology was due to we had for low base last year, or we have launched new products during this quarter?
Both these two segments are very low, small contributions for us. I think there have been no new launches. There's been one new launch in dermatology, but it's not a big launch. But yeah, I mean, that's it. So there will be no significant launches in either of these two product segments.
Okay. So how many new products we have launched in India in this quarter? In all?
In this quarter, Ajay, you have exact number?
Yeah. It's 10 products. 10 SKUs we have launched.
10 SKUs, not products.
10 SKUs.
And what was the number in Q1?
So Q1, 5 SKUs, so all put together 15 SKUs.
Okay. And I think you alluded in US business, in second half, the 10 odd products we are going to launch. So this run rate is going to increase in second half? I mean, any of these products are meaningful in nature?
No, I think roughly, as I mentioned, we launched 15 odd products during the year, and that will remain as is. It may be a little lumped in one quarter or the other, but roughly you should look at about 15 odd launches in the year.
Okay. And to the last one, what I hear that raw material prices has gone up for some basic materials, and that is percolating into your APIs also. So do you see these volatility in raw material is going to impact JPM in subsequent quarter?
So yes, you're right. I think as far as the industry is concerned, there is an increase in raw material prices all across the board. As far as we are concerned, we haven't seen the impact of that. We do carry a little higher inventories to protect for this kind of a thing. We haven't seen that as yet, but yeah, moving forward, we will see it because not just the raw material prices, even with the higher fuel prices, we've seen solvent prices go up, but we are okay as of now.
Fine. And this cost rationalization is in which part of cost structure? Is it on logistic side or supply chain side, or just in the employee rationalization we are doing?
So it's across the board, to be honest, we're looking at cost reduction across the board. So we've seen it firstly in terms of the employees, secondly in terms of the operating costs, thirdly in terms of capex, consumables, and fourthly is in terms of R&D as well.
Okay. So despite our A&D run rate remains same, the R&D would be lower in terms of percentage of sales.
Yeah, I think what will happen is the filing rate, because there's a time lag, right? So I think where we feel the impact of this is after a year and a half, where we may see a little lower filing rate. But till then, immediately the filings which is already in place will still continue.
Okay, fine. Thanks a lot. That's it from my side. Thanks a lot.
Thank you. The next question is from the line of Ritika from ValueQuest. Please go ahead.
Thank you for taking my question, sir. If I heard you correctly, you mentioned to one of the earlier participants that you expect some disruption to happen in the US market in next 6 months and to gain from it. Could you highlight more on this opportunity?
That was said by one of the participants. We didn't say that.
I said that I expect this kind of market situation to continue for another 6 months with erosion and everything else. Will disruption happen? I don't know. I think if everyone knew about it, then it wouldn't be a disruption. But I think right now what I'm saying is for the next 6 months to 8 months, 12 months, I don't know, the supply situation where there's excessive supply in the market, I think that will still continue. That's what I meant to say.
Right. Okay, sir. Also, we are seeing currently recalls and disruption on new kind of impurity in other sartan products. Could you explain if Alembic has exposure into that and the disruption seen in that sartan market currently?
So yes, I think we saw with some of the companies there were some disruptions. I think we have not heard anything clearly from FDA as yet. But let's see what happens. As you know, that's what I was saying, that the US market is a big market with large volumes, and sometimes you may see these disruptions. And if it is there, we'd like to capture those opportunities. But yeah, we're seeing it, but we haven't heard anything concrete from the FDA as yet.
Okay, that's it from my side, sir. Thank you so much.
Thank you. The next question is from the line of Govind Tareja from ASK Investment Managers. Please go ahead.
Yeah, hello. Am I audible?
Sorry, sir, but we cannot hear you. Can you speak a bit louder?
Am I audible now?
Yeah.
So just 2 questions. One, given TG Therapeutics guidance around Euconic scaling up to 50 million next year, and also the PDUFA date for the CLL indication, would it be fair to infer that your income from the Ryzen JV could scale up significantly over the next 2 years?
Yeah, I think, I agree, because as I mentioned, Ryzen gets high single-digit royalty on worldwide net sales, as well as some milestones on each indication. So let's see how TG scales that up, I think, with the new indication once they get that. So that should be exciting. I think it's been a little slow. It's been a slow start, I think, till they get the new indication. So that should be interesting moving forward at the Ryzen level.
I mean, would it have a material sort of an impact on profit growth starting next year, in your opinion?
As I mentioned, Ryzen has a high single-digit royalty, so it really is a function of how quickly TG ramps up Uconic and what level they get to. I mean, they're competing with the new indication CLL. It's a massive space, so it really is a function of how well they do.
Okay. And you also have a manufacturing contract for Uconic?
Yes, we do have a manufacturing contract. Ryzen has a manufacturing contract, and Alembic is doing it for Ryzen. So we do have the manufacturing for that product as well. And as the volumes pick up, there could be a material impact there as well.
Right. And second question on the Aleor JV. I mean, it's not scaled up to a level where, I mean, there has been some delay in scaling up that because of the competition in the derma space. How are you thinking on Aleor? Are there any cost levers, or do you see, an inflection point in the Aleor business as well?
Yeah, so you're right. I think as with all other businesses, the derm business has also seen a lot of competition, and that's why it's become a little competitive. Having said that, Aleor is a very low-cost operation. Having said that, we have also done some cost rationalization at Aleor as well. It's just a matter of getting more products and getting the facility running fuller, which should happen in the due course. We're just going through it a little patiently, just getting our filings in place, and that should help us in the future.
And lastly, sir, how much of the pre-operative expenses are still on the balance sheet, and by when would we be seeing the entire and the full-blown OPEX of the company coming through?
So that would be dependent on when do I start using the facility commercially, and that I can do only after I get FDA inspection clearance and then the product approvals. So difficult to give a timeline for me.
So just a clarification on that, hypothetically, if the facility starts on a given date, would all the cost pertaining to the facility be running through the P&L, or would it be sort of limited to the product lines which are operational within a given?
No, I think we intend to charge up the entire expense once the plant starts producing commercially.
Okay. Thank you, sir. That's all from my side.
Thank you. The next question is from the line of Harith Ahmed from Spark Capital Advisors. Please go ahead.
Hi, good evening. Thanks for taking my questions. My first question is on the capex for the first half. So we've disclosed around 270 crores in one of FY22. So just trying to understand how much of this is capitalized costs, both the operational costs and interest which get capitalized. How much of this 270 crores is that component?
So 270 includes of which 130 odd crores is pre-operative actually. This is the other capex. And interest, we have a very small burden actually. So we have only 500 crores of borrowing, which is attributable to these plans.
Okay. So given at some point this additional 130 odd crores on a half-yearly basis will be hitting our P&L, and given we are having a high level of R&D spend, so when the additional costs hit the P&L and at that point we take on some kind of margin pressures, we face some sort of margin pressures, will we look at our R&D spends as a lever which we can use to kind of offset the impact of these additional costs whenever it happens, in terms of lowering the R&D spend from the current run rate of around 600 to 700 crores spends annually?
So you are making an observation and a statement. There is no question really. So that's obvious, yeah.
Okay. So, last one. Our debtor days has increased versus March levels, but it's still on the lower side. So I was wondering if the normal course of business, we factor receivables or anything specific that's leading to the lower receivables that we have.
So it's more efficiency of business and nothing wrong, but I think our working capital, both together, debtors and inventory together, is in line with industry. We are slightly smarter in receivable management, and we carry a slightly higher inventory, more as a conscious call.
Also, the mix matters, and domestic we will have lower data days actually, and if you see the sales mix, you will have higher domestic business. That has helped actually.
Okay, got it. Thank you very much.
Thank you. The next question is from the line of Charulata Gaidhani from Dalal & Broacha. Please go ahead.
Yeah, my question pertains to the domestic business. Could you give a breakup in volume, price, and new products?
Ajay, you can go ahead with this.
Yeah. Sorry, what you said, can you be...
Breakup between volume growth, price growth, and new products.
So breakup basically between, and this is for the quarter?
Yes.
Yeah, I will give it to you separately, yeah.
Okay. And
in line with industry.
Okay.
So volume growth, small price increase, and new products all together. Breakups are similar.
Right. Okay. And secondly, in terms of the specialty business, do you think this is the new base?
Specialty business.
You are talking of branded India business?
You know chronic?
Yes. India.
Could you repeat the question?
Well, India business is growing now, quarter after quarter after quarter. It would continue to grow, and then, as Shaunak explained, it would be. We expect it to be better than market.
Okay, right. And is it that the major growth is coming from only azithromycin and maybe Vicodin?
We don't get into product wise. The IMS data is all available.
Okay. And acute also, they should continue?
Yeah, acute is more driven by the market, yeah. We should be outperforming the market. Sorry, Shaunak, you were saying something?
No, I said we will outperform in acute also.
Okay. And in terms of US, of the 15 launches that we are planning, are there any exclusive or first to file?
We don't disclose that.
Okay, fine.
Yeah. Thank you. I think, Ajay, we are running out of time. If you have any question, you can take one last, or you can respond to others on offline.
Okay, fine. Thank you.
Thank you. The next question is from the line of Bharat Celly from Equirus. Please go ahead.
Yeah, hi. Thanks for the opportunity. Bharati sir, actually, in the previous quarter, you have mentioned that gross margins will be in the range of 70-71%, and this quarter we've seen around 74%. Obviously, there is a component which is largely because of the domestic business, which would have helped. But going forward in second half, usually our domestic business is on a softer end. So how do you see gross margins panning out to be, considering even there is a raw material prices, the solvent prices which are going to also increase?
So Pranav already responded to this to a couple of other participants' question. See, these are two small micro details because it depends on at what time you bought the purchase. I mean, you did the purchases of material, inventories are carrying at what cost, and so 2-3% on quarter-on-quarter basis is a difficult tracking to do and difficult explanation to do. Broadly, I said the range is now set.
Okay. And Bahit sir, one more question on the rationalization part. So obviously we are doing rationalization for the from US as well as API business. So exactly which are the departments where we are doing this rationalization in? Is it something to do with R&D division as well?
Actually, it is not department-wise or function-wise. It is on a need-based. Wherever we felt that with the growth, we had no time to really reflect on costs and other things, and we were just focusing on capturing business opportunities. Some flap would have built in the system, and we are now trying to cut that flap. So it is across.
Right. And the last one from my side, and sir, how big is the room for us to cut down this cost? Do you see that it can further be brought down other expenses I'm referring to? Obviously, employee will.
Like Pranav said, that we'll start seeing the impact from Q3 and Q4 onwards.
That was referred for the employee expenses, but for the other expenses, to what extent we can see the savings?
Okay, one is it's a consolidated balance sheet, so it also has domestic business. Now, we would continue to invest in domestic business, both in our marketing, promo, field, and all of that. So to that extent, those expenses may go up. Whereas at the IBU level, some reduction in cost in manufacturing operations and R&D may be visible. So altogether, I think the rationalization will be done where it is needed.
Understood. So largely, in a way, we are trying to say that the large part of the savings will be reflected in the employee expenses rather than in other expenses. Am I correct?
Yeah.
Okay. That's good. Thanks a lot, sir.
Thanks for it.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to Mr. R.K. Baheti, Director Finance and CFO, for closing comments.
Yeah, thank you very much, and wish you all a very happy New Year in our Gujarati tradition. We had the new summer starting, and hopefully the new year would bring a lot more stability and prosperity to our business. And thank you for keeping faith in us and supporting us all along. Look forward to see you again next quarter. Thank you.
Thank you. Ladies and gentlemen,